Folks, the markets have been volatile. There's no question about it. We've been seeing the Dow go up 300 points, down 300 points. It's everywhere. And a lot of you are protecting your portfolios by staying away from the market. I know that. But let me tell you something. That's not always the best way. And in today's video, I'm going to talk about trading volatility the right way. Do I worry about volatile markets? Not one bit. I actually get very excited when they happen. I'll tell you why in this video. Then you'll want to click the button below because I created a class for you that'll help you put your newfound knowledge to work in a big way. And you'll never look at volatile markets the same way again. Folks, I know, there's a lot of fear about trading and volatility. A lot of you pull your portfolios out of the market and hide them till markets are safe and not volatile again. But you know what? That's not always the right approach. Let me explain something to you. When markets look volatile, when there's volatility in the market, it creates opportunity, all right? Think about it. Now, I know what you're thinking. Markets can go both ways. Yes, that's true. But if you have a hedge, if you have a protection, if you have a way to monitor your risk, if you use stop losses, if you use profit targets, if you have a dynamic system, it can keep you out of trouble, all right? Now remember, if you are trading, buy and hold, if you're investing, buy and hold, all right, then volatile markets can be scary because it can wipe out years of your investments. You know, we call it going up the hill and falling down. You walk, and then you fall down quickly. But if you're trading, if you're a trader, the best time to trade is during this volatility because your opportunities for profits are big. And if you know how to cut your losers, that'll give you all the opportunity you need. The best profits are made in these type of volatile markets that don't really go anywhere. And here's the thing, with the Fed data, with Feds not lowering rates anymore, and with re-elections coming, and with China still hovering over us with the tariff trade war, there's a good chance we may see this choppy up, down 300 points on the Dow for much, much longer. So getting used to a volatile market is a good idea and good practice. Now, if you tend to invest more in your accounts instead of trade more, here's how you deal with volatility. You lower your position size. You don't completely exit the market, you lower your position size. And that'll help you remain stable during the volatile markets. Most hedge fund managers, they adjust their position size daily to compensate for volatility because they want an even balance between upside and downside. And you can do that too. So for example, I'm not just going to leave you hanging. I'm going to explain to you how to do it, okay? Let's say that volatility in the Dow, I'll use the Dow Jones as a benchmark. Let's say the volatility is 100 points a day on average, and you invested $10,000. Your portfolio is worth $10,000. And now volatility picks up 3 times, all right? It picks up from 100 points a day to 300 points a day. Well, you can lower your exposure by reducing your share size 3 times. Just divide your account into 3 and subtract, take 2/3 of your account off the table. So if you have $10,000, put in leave 3,300 in or 33 in and take the rest out. If volatility goes from 100 to 200 per day on the Dow, go from 10,000 to 5,000, okay? That's how you deal with volatility if you're an investor or if you have an investment account, and I know most of you do. But if you're a trader, you use volatility-based stop losses and dynamic profit targets. And that's how you get the most out of the markets. Ready to stop hiding from volatility and start profiting from it? Excellent. Click the button below this video now to learn how we'll use it for our next Lightning Stocks pick. These picks have seen gains of 981%, 1,893%, and even 2,265%. And no Lightning stock has ever lost more than 13%. So what are you waiting for? Tap the link below now. Get started.